In this week's update, market volatility bites as coronavirus fears ramp up, gold hits a 7-year high, and the UK house builders are in focus. Last week, Wall Street's main markets hit record highs as investors regained confidence that the global economy would bounce back from the coronavirus slump. But that optimism was overturned this weekend with the news of emerging cases of the virus in South Korea, Iran, and Italy, with no clear link to people travelling from China. Italy in particular has started to quarantine possible carriers in 2 regions in the north of the country after a 6th person died from the virus. These are the first such restrictions to be implemented in Europe and prompted the World Health Organization to say the world should do more to prepare for a possible pandemic, while making it clear it's still too early to use that label. The FTSE 100 fell 3.3% yesterday as a result of cases spreading beyond China. That's its biggest one-day fall since January 2016, with other markets in Asia and Europe suffering as well. The US followed suit with the main markets down over 3%, and Japan started today in a similar fashion after their public holiday yesterday. The prospect of limitations on world travel has hurt airlines and travel companies in particular. The bigger picture is that markets are pricing in a significant hit to Chinese economic activity, which will now feed through to demand in the global economy. With central banks watching, investors clearly have one eye on the limited support lowering interest rates could provide, given they are already at historically low levels. Turning to Asia specifically, research from ING estimates the cost of tourism could be in the region of $105 to $115 billion, assuming tourism to and from China grinds to a halt, with further travel slowing significantly. So far, the virus has infected nearly 80,000 people in mainland China, killing over 2,600. However, the Chinese National Health Commission reported 409 new cases yesterday, a fall from 648 the day before. Authorities in the country have started to loosen up some transport and travel restrictions put in place last month, but for now, new cases outside China are taking centre stage. And the news was certainly felt outside equity markets as well. A rally in the oil price through the middle of February came to an end, with Brent crude futures falling by $2 and WTI futures dropping 3.5% on Monday. But a beneficiary of investors' flight to safety has been gold. The gold price has risen to a 7-year high, up 2% on Monday to $1,678 an ounce. The yellow metal has gathered momentum over concerns that global supply chains will be negatively affected more than first thought. Small and medium-sized enterprises make up just short of 2/3 of the Chinese economy. With only around 30% of them back to work and still having to battle transport problems and shipping disruption, investors in gold are expecting it to get worse before it gets better. In the UK, and on a different subject entirely, investors in the nation's house builders will be keen to see the first of them report results at the end of the week, especially in light of the latest housing briefing report from the BBC. The report highlighted the dearth of more than 1 million homes between the current housing stock and the number needed for everyone to have a decent home to live in. The calculations suggest it will take at least 15 years at current building rates to close that gap, and not enough of what is being built is actually affordable. That will have clear implications for firms relying upon inclusion in the likes of the government's Help to Buy scheme, as well as those facing criticism for their current building standards and high executive pay. Persimmon has been in the news on all of those counts over the past year, but it hasn't affected a striking run for its shares in the second half of 2019. The York-based builder completed around 600 fewer homes last year, with revenues falling by 3.5%, so investors will be keen to see their results on Thursday, along with Vistry, the new name for Bovis Homes after they acquired Galliford Try's housing division. House prices have been sluggish over the past 2 years in the UK, but there has been renewed interest from both buyers and sellers as more certainty emerges over Brexit. For more on the stories moving markets this week, tune in to the Money Talk podcast. If you don't already subscribe to our 2 weekly podcasts, just search for Money Talk Radio wherever you get your podcasts.